So back to professional ethics then. This seems to be proving to be a challenge for a number of you. I've been asked more than once to go through the VPLC question, which I did with my own students fairly recently. So this was a question that came from the paper 2 in 2021. So professional ethics is a topic that could appear in either of the papers, paper 1 or paper 2, and obviously it impacts on everything we do as accountants, so that makes perfect sense. So let's look at the question then. So as a recently appointed finance director of VPLC, so you've been promoted, well done. We have produced the following draft income statement. So this is the income statement for the year ended 31st of January 2021. So we can see from this that the company is profitable, had turnover of 1.68 million, and profit for the year after tax was 58,930,000. And we'll come back to some of these individual costs a bit later on. The managing director of the company has made the following comments after reviewing the income statement. So it tells us that revenue has increased by £190,000 from 2020, whilst profit for the year has decreased by £105,000. This may be due to a key customer going into liquidation in September 2020, owing £184,000. Their credit limit was increased in July 2020 without accurately assessing the risk, and they were sold £68,000 worth of goods in August 2020. So that's all quite bad. Finance costs include overdraft interest of 14,700. At the 31st of January 2021, the bank overdraft was 197,200. The arranged bank overdraft limit of £200,000 is due to be reviewed at a meeting with the bank manager in August 2021. All staff are due to be paid a bonus of £500 if revenue for the year is 10% higher than 2020. And a company called ZZ PLC is looking to take over companies in this industry. It's looking for companies who export to the EU and whose accounts show year-on-year growth in revenue and retained earnings. Okay, so that's the comments from the managing director. And then further to that, the managing director has requested you, as the finance director, adjust the draft accounts to offset against revenue the irrecoverable debt of £184,000, which is included in admin expenses. He's also asked you to change the date of the meeting with the bank manager to later in the year, as the overdraft is currently high. And he's further asked you to not to publish this year's financial statements to stop ZZ PLC looking at the accounts. He feels there is no benefit in publishing any financial statements as no one is interested in them. So, after all that, what you've got to do is assess the professional and ethical implications of the managing director's requests and whether he is correct in his view that no one is interested in the financial statements. 25 marks. Okay, so where do we start with this one? Well, let's go back to our 5 steps to solving these ethical dilemmas. What are the facts? What do we know about here? So the MD has stated he's made some comments. We're not sure whether, how much of that is fact. Which ethical principles are potentially compromised by his requested course of action? So you can think IOPCP or PICOP or whatever mnemonic you use to help remember that. But the 5 there are integrity, so that's about being honest, objectivity, professional behaviour, confidentiality, professional competence, and due care. And if you can't remember anything about those, perhaps have a look at my basic video on professional ethics for some help with that. Then you've got the threats to those ethical principles. So these are the things that can cause the ethical principles to be threatened. So self-interest, where you're acting due to some sort of reward that you might be able to get. Self-review, where the same person is reviewing their own work. Familiarity, where particularly with auditors or relationships within a business, things might be compromised. Intimidation, where somebody is either a threat or a perceived threat of something happening or not happening that's intimidating them. And then advocacy, which is where somebody's going above and beyond to promote the cause, one particular viewpoint, one particular company, one particular course of action. Then number 4, we've got to think about, are there any internal procedures or safeguards in place to reduce the risks? Well, with a PLC, at the end of the day, the accounts are going to be audited. So you would hope that any irregularities might be picked up by the auditors. And there may even be internal audit procedures. And there might be other procedures that would help to prevent any problems. And then finally, what alternative courses of action could be taken? So what do you recommend they do rather than what's been suggested? So that's your 5 steps which can be applied generically to any professional ethics problem. Okay. So let's look at the facts then, in this case, the MD's comments. What information has he given us? So he's told us that revenues increased by 190,000. We can find out how much it was last year by deducting that 190 from the 1,680,000 that we've been given for this year. So that gives us 1,490,000. The irrecoverable debt of 184,000 is treated as an admin expense, which is as it should be. So therefore, it's going to reduce the profit for the year. It's telling us that the finance costs include £14,700 in overdraft interest. The total finance costs, apologies for the way the number's been chopped in half here, are 69,300. So that suggests that the company has got other sizable debts. Could be long term, could be short term, we don't know. The overdraft is £2,800 off of the £200,000 limit, so pretty close. Can we work out the percentage increase in sales revenue? So I think we were told something about it needing to be 10% increase in order for the employees to get their bonus. Well, actually, at the moment, it's 12.75%. So the way we find that is to put the difference over last year's revenue figure, which we worked out at the top of this slide, times it by 100. So current increase, if we leave things alone, is 12.75%. So that is more than the 10% required for a staff bonus of £500 each. And then the last bit of information, ZZ PLC are looking for companies with year-on-year growth in revenue and retained earnings. Revenue is increased by 12.75%, but we don't have last year's profit figures, so that will be a limitation. We also don't know, I think ZZ PLC wanted companies that export to the EU. That's a further limitation. We don't know anything about that either. We don't know where VPLC's customers are. So what are we being asked to do then? Number one, he's asking us to adjust the accounts to offset the irrecoverable debt against sales revenue. Is this okay? Absolutely not. The reason for that is that IAS 1 states that an entity may not offset assets and liabilities or income and expenses, and goes on to say why not. But overall, it may mislead users of the financial statements. Okay. Now, in the mark scheme, it talks about assets and liabilities being offset, which is a bit confusing, and I think may have led to some of the confusion with students. It should be talking about income and expenses, because no assets and liabilities are involved here. We're merely moving an expense and offsetting it against income. Well, we won't be, because we're not allowed to do that. So what is the impact of the adjustment? Sales revenue and gross profit will go down, but so do the expenses. The admin expenses will be reduced. So there's not going to be any change to the overall operating profit or profit for the year after tax, and so on. The issue with this, though, is that the revenue would not increase by 10%. If we knock off £184,000, the increase is going to be minimal. So employees are not going to get their bonus. So what does that mean for the company? Well, it'll be a considerable cost saving if they don't have to pay everybody £500. We don't know how many people there are, but disgruntled employees who may become demoralised and possibly leave. So which ethical principles are being threatened here? Well, integrity, that's about honesty. Professional competence and due care, that's about acting correctly and, sticking to the rules. And also professional behaviour. This is not the way that professionals should behave. And that applies to the managing director as well as the finance director. So the threats to those principles, we don't really know what the threats might be. I mean, self-interest and advocacy, both possible here, maybe linked to the ZZ PLC takeover. Does the MD stand to gain something by either being taken over or not being taken over? Perhaps he doesn't want the company to show year-on-year sales growth, as he doesn't want the takeover to happen, or maybe doesn't want awkward questions about the 184,000 irrecoverable debt and whoever authorised the sales in August. So they could come from the shareholders questioning the way the company is run. Okay. Second one then is being asked to change the meeting with the bank manager to later in the year due to the current high level of overdraft. It doesn't really go against any ethical principles, but is it a sensible course of action? We could be sort of challenging perhaps professional behaviour here. I would say almost certainly not. Let's think about the impact of delaying the meeting. The bank are going to be well aware of the level of overdraft because they're the ones producing the bank statement. So they will know that VPLC is right up to their limit. Trying to delay the meeting, I think all that's going to do is arouse the bank's suspicions that all is not well. And obviously the bank is a key external stakeholder. They're owed £200,000. They could call in that overdraft at any time, which would leave VPLC with a massive cash flow issue. So that could cause them to fail ultimately. So it'd be far better to just get it over and done with, have the meeting and discuss the problem, be honest about it. Can we extend the overdraft? Can we negotiate a short-term loan? What other ideas can we think about to improve the cash flow and reduce the overdraft? So the ethical principles, as I said, that might be threatened here are professional behaviour and possibly integrity if they're deliberately trying to mislead the bank. Number 3, then, we're being asked not to publish this year's financial statements in order to stop ZZ PLC looking at the accounts. Does he have a choice about publishing the accounts? No, definitely not. Accounts have to be filed with Companies House. If they're a PLC, that has to be done within 6 months of the year end. If they don't deliver them on time, it's a criminal offence. So the directors could be prosecuted and the company will be fined. So if the accounts are up to 6 months, they could have a fine of £7,500, and that will get bigger as time goes on. Remember, this is a public limited company, it's in public ownership, so we can't just, we don't have a choice about filing accounts, it has to be done. With regard to ZZ PLC, they're not just going to be looking at the accounts anyway, they're going to want lots of other non-financial information, such as a breakdown of who the customers are, where they are, and so on. The ethical principles being threatened here, clearly professional competence. This is not competent, suggesting that we don't file the accounts. And professional behaviour as well. This is not behaving professionally. The other part of this was that he feels no one is interested in them. Well, that is complete nonsense. We've got a whole host of stakeholders, and you may have learnt about stakeholders, probably chapter 1 in the textbook, so it might be something you learnt about in week 1 of your studies. Let's think about those stakeholders, who they are and what their interest is. This is really basic. So we've got the shareholders. They want to know if their investment is safe. How is the company being run? Should they buy more shares? Should they sell their shares? And so on. The employees, will they get their £500 bonus? What are their future prospects for pay rises, promotion? Will the company succeed? Ultimately, lenders, can the company afford interest and repayments? From the financial statements, they'll be able to see how much their loan is in relation to all of the debt of the company. So quite important, working out things like gearing and so on. Customers, will the company be around to supply them in the future? Suppliers, can the company afford to pay for the goods they've already had on credit? Will there be future orders from them? Then we've got government bodies, so HMRC will assess their corporation tax liability, and Companies House, as I've already mentioned, they're going to want the accounts and other information about directors and shareholders, all available to the public. So very important one there. So I think we've established that there are plenty of people interested in the financial statements. Safeguards, think about what internal safeguards and procedures might exist to reduce the risks. So internal audit, we might have an internal audit department. They may well pick up the adjustment for the irrecoverable debt. External audit would refuse to sign off the audit report. So they're not going to get a clean bill of health if it doesn't comply with IAS 1. So that's going to kind of fail at the first hurdle. Now, onto the structure. I haven't actually had time to type up a model answer for this one, but I can give you some hints about the structure. The way I would do this is to take each of the 3 comments and try and pile everything I know, or everything I've evaluated about those comments together. So trying to link things. So we've got some dodgy looking links in the picture there, and include any relevant calculations as we go through. So it's no good just doing calculations and then not talking about them. So we need to be building that chain of reasoning. So, for example, I would say that the finance director should not offset the irrecoverable debt against revenue, as it goes against IAS 1 and would be misleading to users of the financial statements. Furthermore, it would lead to revenue increasing by less than 10%, which means that the employees would miss out on their £500 bonus, and that would lead to an unhappy and demotivated workforce. So I've got kind of quite a lot of stuff in there. It's all linked together. I'm building the chain of reasoning. I'm using connectives, things like furthermore, in addition to, because this would lead to, it's all about building that chain of reasoning, which is really important if you want to get up to the higher levels on the mark scheme. Limitations, we probably should chuck in some limitations as well. What else do we need to know? We don't know if the PLC operates in the EU, so ZZ PLC might not be interested in them anyway. We don't know what the exact takeover criteria used by ZZ PLC is going to be. They're probably not going to share that with us. Certainly haven't got full details in the scenario here. How experienced are you, the new finance director? Are you new to the job, or that would have a bearing perhaps on things. Who authorised those additional sales to the company that went into liquidation? So the £68,000 worth when they were already, over their credit limit, and they've increased the credit limit, and then subsequently the company's failed. I'd want to know who authorised that transaction. I'd hope it wasn't me as the finance director. And then finally, we need to think about our conclusion. So is the MD correct? What do you think? I think overwhelmingly the evidence is suggesting that no, the MD is not correct. He's wrong on all counts. The irrecoverable debt should not be offset, the meeting should not be delayed, and there are numerous stakeholders who are interested in the financial statements. And I think you could, if you've properly evaluated all those points as you've gone along, your conclusion could be quite brief there and to the point. Okay, so hopefully that's given you an idea of how to tackle that question. Let's just go back to the previous slide. Now have a go at writing it, plan your essay, and then look at the mark scheme and see how many of the points you've managed to get. Anyway, thanks very much for watching. And don't forget to like and subscribe.